Welcome back to That Backyard Property Pod. You're here again today for another mini-series, and today we are tackling separations and divorces. Pretty tough topic to discuss. Unfortunately, I have to help a lot of people through this part of the process, and it's generally one of the most emotional parts of the role or the job. However, it's a fact of life, and so the more information I can provide on this topic, the better. The biggest obstacle or hindrance or hurdle I find for people going through this separation or divorce is not understanding their current financial situation and also not giving themselves enough credit for what they can possibly achieve with getting a home loan. In a lot of cases, one party within the separation will want to keep the property for themselves or for the family or for the children. And so one of the main parts I find is understanding what the borrowing capacity could be for that individual if we're just looking at their finances. Keep the property in their name when it goes across to them after the separation. So the first part of the separation and divorce is understanding your borrowing capacity. And so as a broker, what we would generally need is your information and your documents, your ID, your pay slips, and any other income verification to understand what you can actually borrow on your own. The second part is understanding the value of your current property and the one you're wanting to retain. Because once you understand that, we can start to work out whether there might be some equity or some cash contribution to the other party so that you can keep the property. This is obviously general in nature, so having a solicitor or a lawyer as part of this process is vital. But from a lending perspective, knowing what the value is in the property will help when we're doing the calculations. Once we understand the value and we understand what the possible payout might be, we can then work out and reverse engineer the borrowing capacity to ensure that you can get this amount of money. The application to the bank is really important because it generally looks like a refinance. And what that would be is essentially refinancing or taking your existing loan and moving it across to a new bank or still the same bank, but the loan would just be in your name and the title would just be in your name as well. So knowing the borrowing capacity and how much you can borrow is so crucial in this aspect. The other part that most people don't understand is that when there is a separation, you're taking over a portion of the property or ownership of the property. And generally it's 50%, 50%. So you're taking over 50% of that property. Usually you would have to pay stamp duty on that purchase. However, through a separation, if you do have a stamped family court order, the stamp duty that you would usually pay is not payable. So when speaking with your lawyer or solicitor about this, it's important to understand whether there's going to be any stamp duty implications, and generally that won't be the case. So now we're at the position where we understand the borrowing capacity, we understand the amount of value that's in the property and the amount that might need to be paid out to that other party. This is where we would submit a pre-approval to a particular bank so that you have the green tick from the bank when you're going through the final negotiations of the separation. Having the confidence to do this part of the process is so important. And I find anyone that I've helped through this, once they know that the bank will lend them the money, the relief that they have and their ability to feel empowered to actually proceed on their own through such a challenging time is so important. So once the bank has said yes and you go through the steps and the process of actually finalizing the separation, we can then submit that family court order or that final separation agreement to the bank so that they can issue the formal approval and the loan documents in just your name. If there is a cash out component, that cash that's been taken out from the property to pay to the other party will then be available to you to pay it out. and then the new loan will just be in your name. It's important to note that the repayments will be then dependent on what the final loan amount is and what the loan term is. So in some cases, we'll extend the loan term back out to 30 years so that we can reduce the repayment because the loan is now just going to be in your name. And so obviously the liability in paying it isn't just your name. We could also make the loan product an interest-only product for a short period of time, so a couple of years, just so you can get back on your feet, make the payment for the loan, and then once you're through this tough period, you can start actually paying principal down. So there's a few levers we can pull to make sure that you're comfortable and able to make the repayment without compromising on lifestyle decisions and just the general living costs. When going through a separation or divorce, it's so important to have a broker in your team and on your side to help with strategy and advice around the borrowing of the money and what the next steps look like. If you are going through a separation or divorce, or you know somebody that is, please share this with them so that they can feel a little bit more empowered and they can feel that there's actually people on their side that are going to help them through this process, along with the solicitor and lawyer. Because the more people that are involved in helping them through this difficult period, the better. If you have any questions at all about this topic, please reach out. This episode is just around the lending aspect, and it's obviously general in nature, but I'd love to hear your thoughts, and I'd love to be able to help you or anyone you know through this process because it is such a challenging time. Thanks again for being here. I love having you as part of the community, and I can't wait to see you again next week.